All right, welcome back for the episode of Carnivore Trades. Today is Thursday, January 26, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today here. Markets up just about 0.75% here on the spiders. NASDAQ up 1.5. And a little bit of action today. So another kind of interesting day here. We did have Tesla earnings. By the way, Tesla up 9% here. And those of you guys remember, back in December, I said this should get up to 160. And we did touch that today. So Tesla up 60% here since January 6th, which is a pretty incredible move here. But, you know, again, this is just a big mean reversion trade. The hedges are coming off now. Everybody thought I was crazy for calling for 150, 160. To be fair, you know, I said by January OPEX. Okay, so I was off by 4 days, but still a pretty amazing move here on Tesla. And now it is coming into a little resistance here. And again, the target, I would say max upside here for this in the near term might be that 200 moving average. That was my original target for it anyway. And that is sitting at 167, pivot low there, 166. So right in this range here, there's going to be pretty good resistance, but a nice day for the Tesla bulls. And again, now getting really, now this is starting to get long in the tooth here though. So you're looking at 102 to 161 in what, not even really 3 weeks. So a pretty crazy move there. But anyways, for the markets here, possible little signs of distribution going on. You guys know my feelings on, you know, essentially what we're looking at here going into the FOMC. So I've been saying kind of the more overbought we get, the more likely it's going to be to sell the news here. And that still remains the case here. But you're seeing in the morning, you know, not a major reversal. We had a nice little, we had a gap up here. This was a pretty easy short here, by the way, for a day trade. But regardless, you see that when the volume's heavy here, you're seeing big money essentially come in and sell. And then as it dries up during the afternoon, the little guy, the retail investor, the algorithms are just buying back up here. So they're buying the dip here and the big boys are distributing. One reason that I believe that is, like we've mentioned the last couple of days here, take a look at the transports. So transport's down in an up market again. So that's, you know, again, we've been talking about this really all week. So you have a high, a lower high, and then 1, 2, 3 red days versus the spiders, which has a high and then a higher high, and then one up day, a flat day, a green day, and then another green day. So again, the transport's starting to show weakness here, and that is something we're not going to want to ignore moving forward. So keep your eye on that here. And I think the transports are telling us that this market is starting to get top heavy. And like I continue to say, the more overbought we get, the more extended we get into the FOMC, the more, like, the harder it's going to be for the market to keep these gains. I think a lot of the gains are being priced in, a lot of the gains are being pulled forward. So just keep that in mind here. But yeah, nice little move here for the markets. Little hanging man candle. Again, hanging man candlesticks, when you have that hammer with a gap up at the end of an up move, it usually can mark a top. It doesn't necessarily mean that today's the top. Again, like I've been saying, I think we at least hold up into the FOMC. Remember, we still have Meta, Amazon, Google, Apple reporting next week. So there's big earnings as well. I can't imagine there'd be major downside unless we got geopolitical news or something out of left field. But either way, you know, markets are up and we'll respect that for the meantime. Semiconductors are still doing well here, up 1.39% currently. Again, same kind of pattern though, right? Gap up, little sell off in the morning, and then kind of that hammer candle. This can still get to 245, 250. But just, you know, another thing to bear in mind here, this is up 20% since 1228. So 196 to 240, that's over 20% here. You know, these are not types of moves you see in bull markets, by the way, just in case anybody was still questioning. And we're seeing sentiment start to flip a little bit, but I don't think it's quite there yet. I think we'll probably see the euphoric move in the next couple of days, or at least maybe off of the FOMC. But either way, we'll respect the markets right now. They're holding up. Triple Qs here into the 200 moving average. I think you get a close above this that really, and again, back checking against that trend line one more time there. So we basically kissed it earlier this week on Monday, and then we pulled back, and now we're back up into it again. 200 moving average right there. It wouldn't surprise me to see us stall here, maybe be range bound tomorrow. I would like the ideal setup would be like a close above this, and then you get really the bear capitulation. I think that would kind of especially since you're above this trend line as well now, so you're going to get that bear capitulation. If we look at the spiders here again, same thing. You're above the all-time high trend line. That could give you some bear capitulation, which could be what we need in order to, in fact, it is what we need in order for the market to roll over. So just some things to watch here as we go into the weekend here. Remember, I will not be doing a video tomorrow. We'll be traveling, so I'll get one out Monday, obviously, as normal, but just so you guys know and are aware of that. Anyways, Russell finally making a higher high here now. So, but again, it still took it a little bit longer here, so you had a high here and then lower highs. We just made a higher high today versus, again, the spiders, which have been making higher highs. So Russell also showing laggardship. So we're seeing the transports lag, the Russell lag. So Russell's a risk on index. And take a look at the Russell, by the way, intraday here. Not making new highs, right? So down move, and now we're just kind of like lazily, it's not a V shape, it's more just kind of like a lazy float back up, whereas the spiders are basically making new highs, the Qs are basically making new highs, and even the Dow is basically right up at the highs. You see the semis, obviously. So again, laggardship here from a small cap index is not a bullish sign here, so just bear that in mind here. Dow, nothing's changed. Again, we're looking for 345 there on the diamond. So yeah, again, that's potential, that has the potential to get hit here possibly next week. I mentioned the semis already. Cloud software here is through that double top. So we'll see again. We have this level here, gap window right around 285, and then the gap fill around 295. So those are your max upside moves here. And then your term for IGV, we already talked about the transports here, but again, it's holding trend for now. But what's important to me right now is the divergence. And if you start to make a lower low, that's going to be really problematic. And it's going to be really telling us a sign. So just be aware of that. Keep an eye there on the transports moving forward. Anyways, yields here, 10-year up 90 basis points, which is a pretty big move. Or I should say the TNX rather. The actual 10-year 10-year note was down 27 basis points, but still has a nice little daily inside bar here. So this can hold up, possibly get through that 200 moving average. In fact, it probably does want to do that. So whenever you consolidate beneath a level like that, usually you want to push through it. So we'll give the 10-year the upside bias here. Same thing with the 2-year. Again, still looking for that target to fill out. Possibly could happen off of the FOMC next week. Definitely can't rule that out. And then the 30-year here is ZB. Same nice little inside bar. I like this pattern as well for a possible push up. So bonds here looking pretty decent. Again, like I said yesterday, I think gold's a little out of line right now, but there's also kind of like a lot more geopolitical tensions too, and I think that has a lot to do with gold, which we'll talk about in a second. But in any case, bonds holding up well. We'll just keep it simple right now, and we'll give them the upside bias. All right, home builders XHB, again, still showing weakness here. Again, it's flat, so nothing terrible. ITB flat as well, but again, no higher highs here, right? So XHB and ITB both showing laggardship there. VNQ just made a higher high, but again, it took it several more days than what the spiders did. So again, still under the gun a little bit. Probably wants to go test that 200 moving average, so we'll give it the upside bias to 91 for now. XLF, another laggard. So again, yes, we just finally made a higher high, but it's taken quite a while here. So again, a little bit of weakness there in the financials. You guys know my thoughts on that. Broker dealers just went up and touched that 490 area. They are flat right now, a little doji. I wouldn't make too much out of this. It's still holding up okay for now. Over to energy. So crude here. Again, just continues to deliver us nothing burgers. I think this is, at some point, this has got to coil up for a big move. I mean, the volatility in crude is very low right now, at least, compared to what it was earlier, I would say last year. I mean, look at the size of the candlesticks, right? Just look at the size of the candles, and then, it slowly kind of they get smaller and smaller and tighter. So maybe crude coiling a little bit here. It is pushing against the upper end of this range, but again, still on the weekly, giving it a bear bias till you get above that on a weekly close, and it is not doing that just yet. So just be aware. XLE here, I did just get a fake print here on my intraday So I don't know if that's a fake print or what, but right down to 90.75. It's not like it's a huge, it's basically just back to today's lows, but big move there for XLE, and that is above this daily resistance now. So unless this reverses, so keep this on your radar tomorrow. Let's put this in here right now. So this is something you're going to want to watch tomorrow because I won't be here. If I can get that in right. So 91.56. If that, anything can happen tomorrow. All right, so there you go. Yeah, if you close back below that, you're still an inside bar. So just be aware of that. But XLE, nice move here. It's pushing higher and it looks strong here. XOP, still a ways away. It's got to get above 150.32, but it's hanging in there. And it is beginning to float up. OIH here on the weekly. And then there's the daily there. Again, kind of similar kind of pattern here, kind of a hanging man candle, still inside of this red bar, but the trend is up, so it's holding up okay. We'll give it the benefit of the doubt for now. Nat gas, this may have bottomed here. I did have a max move around 290, and that got hit today. It actually pierced it just by a little bit. And take a look at the volume. So I want to show you here on UNG. 33 million here, and we've got 30 minutes left. That's more than 50% of yesterday's volume, and yesterday's volume was heavy too. I think this may be trying to put in a bottom here. My guess is somebody, a country, European Union, China, someone wanted to take delivery below $3 really badly. And remember, we do have a contract rollover tomorrow too, and there's a lot of upside hedges here that are basically eating a hole in the pockets of institutions. $4 and a lot at $5. I think this will get up. It's very much, I've been telling my members, it's very much kind of like the Tesla trade here, where it's just, you got this rubber band and it's just getting so stretched and so coiled that when it finally snaps, you get a 60% up move. And nat gas is no stranger to 60% up moves. I mean, this is a 100% move. This is a 50% up move. So honestly, $5, this is where I'm expecting nat gas to go. I don't know if it goes there in a month, in 2 months, but yeah, this is ridiculously overdone here. And we did see some maybe possible capitulation here today with that UNG candle there. So pretty interesting stuff here. We'll keep an eye on that for tomorrow, but nat gas nicely off the lows. It's getting a nice bid here into the final hour. Anyways, over to the dollar. All over the map here. I still think it's trying to carve out a bottom right now. But yeah, again, was up, it was down, closed up 18 basis points. Won't make too much out of it. But again, you guys know my thoughts there. Gold, again, nice sell here today, but still holding trend here. I mean, you basically have, you engulfed the body of yesterday's move. We didn't quite get, obviously we're off the lows here. So almost, a body engulfing candle on gold here, but still holding up well. No real technical damage done. It is way overbought right now. And like I said here, you look at the ZB and it's really, it's off the lows, but like gold is like, whoa, way off the lows here. It's almost near the highs, I mean, it's only got another $150 to go. So gold, I think, is a little off sides here again. It's really overbought. It's extended, needs to pull back, everything, however you want to call it. But it's holding up really well, so we'll respect it here. For the time being, silver here also holding up as well. I still think this does need to correct, but it's been holding up okay. So really just kind of stuck in it. And I'll say at this point, though, whichever way it does break, it's going to go hard because this has been coiling here for weeks now. So we'll watch for, it is a little, I would like it if it was kind of like an up move and then a right angle pattern. I don't like this rolling I don't like that because it looks kind of like a rolling top here. So I'm a little bit more neutral on it right now, but whichever way this breaks, it's going to be a big move. But I think silver has bottomed though, just so you guys know. Anyways, platinum here, starting to lose trend. So this may go into backing and filling mode. First level is 1,000. If you get through that, 975. So those are the levels there. On PL futures, copper here, holding up well. I still think this is trying to carve out a top here. Copper is overdone, if you ask me. Lastly, Bitcoin, again, not really too much to add from yesterday. Again, it's still holding up. It's holding this range here, nice inside bar on the daily. So this still has the upside bias to about 25,000, and it's hanging in there well. This, unlike kind of the Russell here, where Bitcoin is a risk on. I guess it's pretty much like the ultimate risk on thing, at least right now. Whereas like the Russell is also a risk on index. I this has made a higher high, I guess technically, so it's better than the Russell. But you have a nice inside bar there. So on one hand, you've got kind of the Russell showing weakness, Bitcoin showing strength. Again, it's not all things at once. You got the transport starting to show weakness here. When these things top out, it's not all indicators flip red at once. It's kind of like one here, one red flag there, and then you get a bunch of them. So, but again, Bitcoin hanging in there. We'll give it the upside bias for now, but I think these are all on borrowed time, if you ask me. Okay, so back over to the spiders here. Nice day here. Looks like they just pierced the high of the day there, right into that 330 time frame. We'll see. We'll see what happens here. I will say though, take a look at the VIX. This is getting hit pretty hard here, but it still hasn't made a new low. So again, another little micro divergence there. So from January 13th, we're still above that low, but the spiders obviously have made higher highs. So VIX still showing a little bit of a divergence here, but either way you slice or dice it, this market is getting very complacent here, especially when you consider we have earnings next week and the FOMC as well. So, you could make a case even like the last time here into the FOMC, I think this was not sure. I think wasn't this a contract rollover or something? I'm not sure, but we were up ahead of the FOMC, which makes sense. We were up into this FOMC. We're really down ahead of this one. So maybe some complacency here going on. And I don't know. It just feels like the market is just assuming we're going to get a soft landing and the Fed is just going to go full pivot here. That's the kind of, you look at gold here. Gold's behaving like the Fed's already pivoted. The market is behaving, Tesla's up 60%. Semis are up plus 20% here. So I think the market's getting a little offsides. Again, you guys know my thoughts on that. Anyways, I'm going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. Talk to you guys all next week.